Hello, everyone. My name is Joan Pugh. I'm with First Financial Federal Credit Union. We're the credit union for Baltimore County Public Schools. We're so pleased to join you today to talk about Credit 101. I'm going to share my PowerPoint presentation in just a moment. But before I start, I'm going to say thank you. Thank you for agreeing to serve our community. Thank you for all the things that you do for our community. We are here for you. And this is just one way that we are. So we're so glad to be with you today. I'm going to go ahead and share my screen, my presentation. And we'll pull this up. Because our topic today is Credit 101, how to get it, how to use it, and how to protect it. So those of you who don't know me, my name is Joan Pugh. I'm with First Financial Federal Credit Union. I'm the relationship manager. What does that mean? Well, my job is to connect the two organizations. My job is to help bring credit union resources to the school system and help BCPS staff navigate the credit union. So please do not hesitate to reach out to me if I can be of any help to you. So what are we going to talk about today in Credit 101? Well, credit basics, then we're going to dig a little bit deeper. Then we're going to talk about why you would want to take the effort to have good credit. I mean, what the advantages and disadvantages are. And then how to improve our credit score. And when I say you or we, this is a corporate thing. This is a no shame, no blame zone. This is a learning place. So please don't feel intimidated or judged. That is not our goal at all. We're going to talk about GreenPath, which is one of our resources, and Savvy Money's credit score, how to shop for credit, and some common questions. Let's go ahead and begin. So, who cares about credit scores? Well, everybody should. We should care what our credit score is, and we should try to do everything we can to get our credit score as high as it can be, because our credit score affects all areas of our life. Renting an apartment, when someone applies to rent an apartment, they're going to have their credit checked. Security clearances. We have something here at the credit union. If you're going to work for a financial institution, we want them to, we want a certain credit score. New employment. Even something as simple as applying for a phone. Loans for houses, cars, extra money. All these things are affected by a person's credit score. So what is credit score? Because we hear these two words, one's credit score, one's credit report. Well, the score is a 3-digit number, and it's derived, that 3-digit number is derived from all the information on a person's credit report. How does this number come to be? Well, it's calculated using a formula, an algorithm indicating the likelihood of repayment and how risky it would be to lend to the person with that credit score. Generally, the higher the credit score, the lower the risk to the lender. So we want a high credit score. The credit report, on the other hand, is credit-related information that a credit reporting company has gathered from different sources. Some of the information that would be on that report might include records of mortgage payments that a person's made, credit card balances, credit card payments, auto loan payments, and credit inquiries. It can also include estimated income or recently reported employment information. Depends on the reporting agency. So basically, your credit score is calculated from the information listed on your credit report. So both of these things are really important. So again, we talked about the fact that the reporting agencies use different formulas. So the number could be slightly higher or lower, depending on which organization you're pulling it from. It's also going to change from day to day for a reason that I can't honestly, absolutely pinpoint for you. Again, it's a moment in time. FICO and VantageScore are the common models available to lenders. So let's look at those scores. So typically scores range from 300 to 850. 300, you have to really work at that to get to a 300 by mostly not paying anybody. So if a person's credit score is between 781 and 850, we would call that excellent credit. Good credit would be 661 to 780. Fair is 601 to 660. Poor is 500 to 600. And very poor is 300 to 499. This is a scary number. This means 39% of Americans have poor or very poor credit scores. That's troublesome. So we know that that's the breakdowns of what we consider excellent credit, good credit. But how is that determined? Well, there are categories within the credit score that are weighted differently. 40% of a person's credit score is based on their payment history. Do you pay your loans on time? The best predictor of future behavior is past behavior. If a person has paid their loans on time in the past, they're more likely, we assume, that they're going to pay their loans in the future. 25% or 23% of the score is based on credit usage. So this is the ratio between the total balance you owe and your total credit limit. Ironically, we're going to say this a couple of times in this presentation, closing accounts impacts your score because it shrinks the total credit available. So if I have $10,000 line of credit on my Visa and have a $3,000 balance, that's going to be a lot better for my credit score than if I have a $10,000 limit and a $9,999 balance. 21% is credit age. And we don't mean the age that a person is when they have the credit. We mean how long have they had that loan or that credit card? Because the longer the credit history, the better. So it's going to look at your oldest credit and your newest credit, and have you used an account recently? That oldest is important because showing a consistent history of payment in a long-term credit card is going to show good credit. 11% is mix of credit. How many total accounts do you have? What types are they? Do you only have credit cards? Do you only have auto loans? Do you only have a mortgage? We want to look for a balance. And then 5% is recent credit. Opening multiple credit cards in a short period of time could represent a greater risk for lenders. And that's because there's certain red flags that go up. Often a person, before they're declaring bankruptcy, will open a whole bunch of cards and rack up a pretty significant balance on there. So if we see there multiple openings with balances, that's a red flag for us or any lender. So that's how it's broken down. So when I'm saying, okay, I'm going to the credit report to see what's on there, what is on there? Well, your public record. So if a person has declared bankruptcy, has had liens put against them, reported to a credit bureau or credit collection agency, that's going to show on your credit report. Record of mortgage payments. How long have you had that mortgage? Are you paying that mortgage on time? What is the payment? Because when you fill your application out, we're asking, or a person is asking, what is your mortgage payment? So if a person says their mortgage payment's $1,000 and we look at the credit report and it says it's $1,500, that's a problem. Credit card balances, credit card limits, credit card payments, installation loan payments. Do you have a personal loan that you've been paying on, a car loan? Credit inquiries. Are you shopping for credit? Is somebody else shopping for credit in your name? And total loan amounts. And I can't say this enough. It's vital that your credit report is accurate, not just to make sure that your credit score is accurate, to make sure there's no fraud on your account. So people will come and say, well, I've signed up with this agency that'll pull my credit for me and monitor it. Is that legit? We're going to talk about that in a minute. Sure, but you don't have to pay anybody to do this. Because under federal law, you're entitled to receive one free copy of your credit report from each credit reporting company every 12 months. There are 3 of them. So you could pull your credit from each different one every 4 months, and you can keep track of what's happening on your credit report. So what if you see something on your credit report and it's not right? Well, you want to contact the company that issued the account. So if your First Financial is listed there and there's something that you don't think is right, you would contact us to take a look at it. Or you go to the credit reporting company. We report to credit agencies every 30 days, every month. So we're constantly updating that information. All right. So are there any advantages of good credit? Are there any advantages of good credit? Let's see what they are. There are lots and lots of advantages. I said this, that we really want to have our credit score as high as we can. So as we said before, the credit score indicates the likelihood that you would default on loan. So we use this information, financial institutions use this information when deciding whether to approve a loan or a credit card. So once you're approved for the loan, your credit score can determine the amount of interest you pay. The lower your credit score, the higher the risk. there is to lending to you. And so if you have a lower credit score, the financial institution may charge you more interest. The higher a person's credit score is, the more likely they are to pay their loan on time. And because that's minimal risk, the financial institution will pay less interest on the loan. So let's see a concrete example of this. Let's use the example of a $5,000 personal loan. The term is the same, 48 months, but the person with a 700 or better credit score, they're paying 9.65 interest, right? Their monthly payment is 125.97. Someone with a lower credit score, 600 to 639, same term, they're paying 18%, almost double interest rate. Now their payment's a little bit higher, 146.87, but look at the big difference on total interest paid on the loan. Because when you're choosing credit, it's not just what the payment's going to be and the term's going to be, it's what's the total cost of that lending. So someone with a credit score of 700 or better in this example is going to pay $1,000 less of interest over the life of the loan. That's significant. So people say, well, maybe I should just have no credit. Maybe I just don't want to even get involved in that. Well, there are advantages to using credit, specifically cash in an emergency. My emergency was always the vet, right? We would want to take a dog in, and $1,000 later, you're walking out the door. Having credit is very helpful in that situation. Being able to make large purchases now, like a car or a house. I mean, we're seeing car loans and truck loans, especially at $70,000. I don't know anybody who can pay that in cash. But when you borrow the money to do that, you can pay as you go along. There's safety and convenience. When I pull out my credit card, I can use it online. I can use it in a store. I have the backing of Visa behind that purchase. And then earning rewards. So here at the credit union, it's cash. But other people like bonus miles or different things. I know some people who are so organized. My brother-in-law, for one, the accountant, he has a spreadsheet as to which card they should use for which month to maximize their rewards. Some people really like that. So what's the disadvantage then of using credit? Well, it costs you money if you're paying fees or you're paying interest because you're carrying a balance. It does tie up your income because you have to make those payments. And it makes it really easy to overspend. Somehow swiping that card doesn't feel like real money. So it's very easy to overspend. If the loan isn't paid, the property or goods could be lost. If you have a car loan and don't make that payment, you could have your car repossessed. Same thing with your house. And then negative credit rating for late or non-payment, because you got to keep up with these things, not let it go late. Okay, so I've convinced you, right? Credit's a good thing when it's used properly. Credit score, the higher the better. I know what my credit score is because I pulled my credit reports. How can I improve my credit score? Let's get some strategies. Pay your bills on time. Because as we said, 40% of that weighted credit score is tied to late payments. That's the thing that will affect your credit score the most. And not as much today because we can go online and pay things, but putting it in the mail on the due date is not the same as the company posting that payment on time. So make sure that you're giving enough time that that payment is posted by its due date. You can increase your score by only applying for credit only when you need it. Don't open too many accounts frequently. Don't do a lot at the same time. So we say keeping the balances low is good. That amount of available credit versus the balance. A good rule of thumb is 30% of the credit limit on any account. If you can't pay off your credit card balance, keep it as low as possible. And you will not increase your credit score by carrying a balance than you would by paying off your balance each month. About 70% of our members here at First Financial pay their credit card off every month, which is great. You can reduce your total debt if possible. That will help increase your credit score. It's not necessarily bad to owe some money, but it's not too good to owe too much money. And then build up a credit history, right? And with different types of loans. Consistent payment of those debts will increase your credit score. Righty. So we have some specific tools that you can use to get information, because information and knowledge is power, right? You can't do what you don't know. So we have lots and lots of teaching tools. So you can go, whether or not you're a member, you can go to our website, firstfinancial.org, and go to our educational resource website. Lots of things there that will help you. We're going to talk about those in a minute, including Savvy Money's credit score, which is a phenomenal tool. One of the tools that we have in our quiver, our arsenal, is GreenPath. GreenPath is a financial wellness organization that we have partnered with. It's a telephone number. You do it over the phone. Their counselors are really compassionate, respectful, with the same attitude, no shame, no blame attitude that we have here at First Financial. They're also National Foundation for Credit Counseling certified. So you have to be a member to use GreenPath, and they will offer some services for free. So financial and debt counseling, they'll help review your credit report, they'll talk about student loans, mortgage delinquency counseling, and rental counseling. They also have other services they're going to charge a fee for. So you see that list on the right-hand side. We have folks who do everything from call them to say, I'm getting ready to buy my first house. What do I need to do? To people who say, I'm considering declaring bankruptcy. Can you talk to me about this? And lots and lots of other resources too. So that's available for First Financial members. Savvy Money Credit Score is something that is relatively new, and our members love, love, love it. So you have to be a member to use this. It's available to members through online banking and mobile banking, and it's the credit score by Savvy Money. So you register for this program, and then every day a soft pull is done on your credit score, and it shows you what your credit score is. It can also generate a credit report for you. And then it gives you grades for each of your categories that affect your credit score that we talked about earlier. And then it gives you strategies for how to improve that. And then there's also a simulator that shows if you do certain things, like get a new loan or increase your credit card balance, how that might affect your credit score. And then it also will offer you special offers from First Financial based on your credit information. What I love about Savvy Money, and I use this, I won't say daily, but certainly weekly, I can see from week to week what my credit score is running. So if I saw a 100-point dip on my credit score, I would be on the phone ASAP because I would know something's going on. It's nice just to keep that consistent monitoring of what's happening. And again, it's right on the mobile app or online. So this is how you enroll. You get into online banking and show my score. It's on that side of the screen. And then different screenshots of what that looks like, how you're grading in different areas, what your credit score is, to refresh, all these things. Then it gives you an analysis. I have to say, though, this is really funny to me because when I pull mine up, it tells me every single time to diversify my credit. Well, that's because I have everything here at the credit union, right? I don't know what they want me to do. And I'm like, no, I'm fine, thanks. It shows the credit monitoring. It gives you a place to dispute anything that you don't agree with on your credit report. And then it gives you free resources. And so this is everything from blogs to videos to tutorials. It's all available to you, totally free. A great tool. What I love about this too is like, I'm sitting like in the doctor's office or something waiting for my appointment, and I don't have a book with me, but I have my phone. So I could go to social media if I wanted to, but if I go to Savvy Money, I can learn something in the 5 or 10 minutes that it takes me to wait. So great tool. Some of the blogs, and all those are available to you. Some of the resources on the site, on firstfinancial.org site, are available for non-members, like Bonsai and some other things. Some are only member, but we want to help you. The other reason I say that, and I think this is important to know, and I would have mentioned it by now, is the fact that First Financial is a fiduciary. And whether or not you bank with us, you want to bank with a fiduciary, because a fiduciary, by structure, by policy, by the way we do business, we're always putting the member first. That's really unusual for a financial institution, right? Lots of financial institutions want to keep their members in a hole. We don't. We want to make sure that we have our members be as financially well as they possibly can be. Makes a difference. All right, let's talk about shopping for credit. So when a person's shopping for credit, meaning they want to get a loan, how are they going to qualify? Well, we call it the 4 C's: character, capacity, collateral, and credit. So when we say character, we don't mean, are you a good person? We mean, what's your job history? And what's your residence history? If you've had a job for a while and you've lived in the same place for a while, that gives us assurance that you're going to be around to complete the obligation of the loan. Capacity. Do you have enough income coming into your household to support this new loan? Collateral. That's the security behind the loan. You'll notice when you look at car loan rates versus personal loan rates, car and truck loan rates are always lower. That's because there's collateral. You're putting something up um, for the loan, as opposed to a personal loan where it's just your signature and your good name. So collateral makes a difference. And then credit, with payment history, the credit score. And so it's really important to do the shopping around, because you want to make sure that you understand what the term you choose does to your monthly budget and to the overall cost of the loan. So if a person has a 700 credit score and they're looking for a $5,000 loan, they want to look at what the term is, what the interest rate is for that term, what the monthly payment is for that term, and what the total amount of interest paid is. So take a look at this example. Someone wants a 48-month $5,000 loan. The interest rate's the lowest of all three choices, 8.65, because the risk is less because it's a shorter loan. The payment's the highest because it's a shorter term, 123.61. And the total interest is 932.74. So let's say I want to take it out to 60 months. My interest rate's going up a little bit, about a point. My monthly payment's going down, not quite $20 a month, but look at the jump in my total interest paid, 932 to 1332. So let's say I want to take it out 72. I think 123 might be a little much out of my budget. My interest rate goes up yet another point, 10.65. My monthly payment goes down closer to $30 a month. But look at the total interest paid, 1788. So I'm doubling the amount of interest. I'm having a little bit more cushion over that 72 months, but I'm having to pay another year. And the total interest I'm paying is a lot higher. So it's important to know you don't want to strap yourself by having a payment that you can't afford, but you don't want to stretch that loan out so far that you're paying interest that you don't have to pay. When you are looking at taking out a loan, you want to read and understand the contract, especially in this day of click, right? So someone sends out a DocuSign, you click sign it. It's got 100 million, looks like, words in it. Don't rush to click. You want to know all the expectations of the contract. You want to know what the penalty is if you miss a payment. Sometimes credit cards will have a nice low introductory rate, and with your first late payment, they raise it to something in the 20s. So you want to know what the penalty is. You also don't want to apply for too much credit at once. Remember, that's going to ding your score. You want to know what the annual percentage rate is. What is the APR? Are there any fees associated with this loan? Or if it's late, do you get charged a late fee? If you're going to do a balance transfer, that means that you're taking a balance on one credit card and putting it on another credit card. At First Financial, there's no fee for that. Often there's a 3% fee for that balance transfer. So then you have to do the math. Is it worth the fee to get the lower interest rate? Is there a fee if you go over your limit? And if you get a windfall and you want to prepay the loan off, are they going to penalize you for that? You need to know that. And what's the grace period, before any of these fees would kick in? And what's the grace period on your credit card? So here at the credit union, today's the 13th of June, you have until the end of the next month to pay purchases off in full without incurring interest. That's a long time to use money that somebody else's. But also, what's the grace period if you have a late payment before you're charged a fee? Or is there even one? Are there any incentives, rewards, rebates? Are you taking out a HELOC, which is a home equity line of credit, and being charged fees, or there's fees being waived if you keep the loan for 2 years? All those things you need to know. So you're going to want to look at the details, and you want to use a comparison tool or site to find the card or loan that's best for you. Again, as a fiduciary, we're going to say we're probably always going to have the best for you, but that's not necessarily our goal. Our goal is to have it be the best for you. So we encourage you to do some comparison. Credit unions will have favorable rates, But I say folks could be a member of more than one credit union. Let's say you're new to BCPS, but you've been a Navy Federal Credit Union, which by the way is the greatest credit union in the state, in the country. You've been a Navy Federal member forever. Keep them, but get us too. You don't have to have just one, and then you can compare us when it comes time to do some lending. Understand your goals and habits, right? So rewards are wonderful, but are you going to pay that balance off each month? I'll tell you, I'm not. That's a really hard. I know folks who charge everything on their credit card to get the cash back. I don't have the discipline to pay that balance off every month. So I just put on my card big stuff and stuff I know I can pay off. And then there are resources like this Nerd Wallet, 10 excellent credit cards of 2023 that we would encourage you to look at because you want the card that's going to be best for you. All right, so let's see some common questions. Does closing a credit card improve my credit score? No, actually it doesn't. It might even lower your score because you want to have that be using a part of your available credit. So if you have two $10,000 limit cards and you have a balance of $3,000 on one and none on the other, and you close the one that's none, then you're comparing 3 to 10,000, not 3 to 20,000. On the other hand, if you keep the card open, are you looking to rack up debt on that card? If that's so, maybe you might want to think about closing it. But you need to know what the consequences of each of those actions is. Does shopping around for loans hurt my credit score? No, they've changed this. So if you're out car shopping and you're going to a couple dealerships and talking to us and whatnot, and we're pulling your credit to pre-approve you, and it's bunched together, then that's all counted as one inquiry because we know what you're doing. You can see it by the pattern. You're not going to get dinged for all those. If I have no credit history, will my credit score be 0? No. Credit scores usually start in 600, and then depending on the behavior of the person, it either goes up or down. But that's why it's so important if you have young people in your life to get them this information. They need to know what's going to happen. Because if they take a store credit card and they charge a bunch of stuff and they don't pay it back, they're going from that 600 and they're tanking. It's really hard to move back up, especially with such a short history. So we want to make sure we're sharing with our young people how to use credit wisely. Our credit repair company is legit. Yeah, but they're going to charge you. This is like you see these signs out there, repair your credit. They're going to charge you a fee and they're going to make promises they can't keep because even if they petition to the credit reporting agencies to remove everything and they somehow remove everything, guess what? It all gets reported the next month. So anything that those agencies can do for you, you can do for yourself for free. What is a refinance? A refinance occurs when an existing loan is paid off with a new loan in its place. So sometimes, well, why would I ever want to do that? Well, maybe I want a lower interest rate. We do that with our mortgages a lot, right? Folks see that the mortgage rates go down, not recently, but I mean, that they go down and then we refinance our mortgage. Or maybe we need a lower payment, so we need to extend the term. Or maybe I'm getting cash out like a HELOC. So I'm taking equity in my home and I'm getting cash out. All those would be reasons to refinance a loan. Is it more beneficial to pay the loan off early rather than paying the minimum each month? Well, it depends on your goal. So if you pay the loan off early, you're paying less interest, you're going to save more money. But if a person's looking to establish good repayment history, you might want to make the minimum payment for a period of time. You also have to look to see, is there any prepayment penalty? And weigh that cost versus the amount of interest that you will save. So it's not a simple yes, no question. You need to do some investigation. All right, so loan safety and security. It's really important that we do everything we can in our power to protect our good name, our good credit. So we definitely want to watch out for internet scams. We have a whole other presentation about this. But anything that pushes your buttons to make you act quickly, stop and think twice about that. If you lose your card, contact the card issuer ASAP, because even if it's home in your pocket, sometimes we can turn it back on. But what we don't want to have to happen is a live card out there with somebody going to town on it. Review your monthly statement to make sure that all your purchases and charges are accurate. Don't give out your social security number over the phone, over the internet. Why do they need it? Don't carry that social security card or number with you. So we have some sources here. I hope that this was really helpful to you. And thank you so much. I'm going to stop sharing my screen and say it has just been a total pleasure being with you and presenting this information. I'm going to encourage you to reach out to me if I can be of any help to you. I'm going to stop sharing. Here we go. Maybe you didn't see my face. There we go. So I just want to thank you again for taking the time to watch this. This has been really, really a pleasure to share this information with you. We want you to be financially well. We want to partner with you, and thank you for the opportunity. Have a great day.